generally looks very attractive.
All right, that's Timothy Moore of Goldman Sachs. More and more people that we speak with are of the opinion that at least in the near term, is because of this China factor, near term there could be a realignment of portfolio flows. China, even after the rally, as Timothy pointed out, trades at some 11 times earnings, and we're at about 22, 23 times. So this is a near medium term thing. Mark thinks it could extend all year in 2023. Others believe it could be short lived, the relative outperformance. But that's an important one. Prakash Diwan is with us. Prakash, good morning. Great to have you with us here. Thanks very much. It does this. It's a top-down kind of a call, right? This China-India business and flows, etc. But it's also real because at the end of the day, liquidity and flows are, in a way, the mother's milk for the market, right? So, what's your sense? I mean, for individual investors, what does this mean?
So, good morning, Prashant. So, I think what we need to realize is that the market was telling us that there is something positively afoot on the Indian markets in terms of the attractiveness. And that's precisely why we outperformed the rest of the emerging markets by a significant margin, and we continue to do that. The reason is we probably promise more two things in terms of growth. One is longevity. Whatever the growth trends that you're seeing, and come 23, 24, which are election years, general election years, you usually see a lot of priming in terms of the expenditure and, hence the cascading effects. And the second thing is, apart from the visibility of earning, the longevity of earning is the visibility of finiteness of earnings. I think that is something which a very, very few markets today offer, Prashant. So for individual investors, they will have to follow where the institutional money is in that sense from a macro or top-down approach. And yesterday's rate hike also kind of tells you that we could probably be closer to, some sort of a peaking out on interest rates as well. Probably maybe another round of hike, and that's probably it. And then that is very well aligned with how things are looking in terms of the overseas and the domestic views on the macro. So for individual investor, I think they'll have to continue allocating more money into sectors that seem so promising and still haven't yet run away from a valuation perspective. So for example, banking case in point, or cement or infrastructure. I mean, these are pockets where they'll have to reallocate more money as compared to what they've done in the last 3 years. The pandemic period was very different, but now people will have to get a bit more sectorally strongly aligned to what's working rather than do just a bottom-up thing. So that's a big change that I'm seeing in terms of the portfolio needs. But then, of course, it all depends on the individual risk rewards.
Morning, Prakash. Yesterday's big gainer was Asian Paints, aided by the decline in crude prices. And we continue to see crude prices slide from even yesterday's level. Now Brent is at $77 per barrel, the lowest of 2022. Are paint companies an attractive opportunity, or do you think they've already priced in lower crude prices? Because they've started moving up over the last couple of days.
Well, good morning, Rima. I do agree, crude has this direct impact on some of the larger, consumers, consumption themes, which have a huge percentage, and we've seen how airlines and paints and all of those react. But, what's interesting is what's changed in the last 2 years for the paint sector is there's a huge incumbency that's come in the sense there's so many new players that have been added to the entire sector. If you look at, while the market size is still very large and there's headroom for growth, it's the ease of acquiring market share that matters a lot when you have so many players starting off the blocks together or almost at the same time zones. So whether it was Grasim or whether it was Astral or whether it was some of the smaller names, all of them have kind of started nibbling into the pie. While the pie might take some time to grow as the economy grows, there could be some market share shifts which are probably more expensive or more costlier in that sense for the likes of Asian Paint. The leader might lose some weight, but you have contenders like Axo Nobel, which I think from a mix perspective is available at decent valuations. And while there's growth for everybody, it's how much profitable growth do you have? How much is it that you need to spend on your COGS? So your gross profits need to be as robust if revenue is as robust, and that's one company that could probably outperform the market from a sectoral perspective. So I think Asian Paints, while it has benefited, it's going to benefit all given the crude salience. But I would not add more money at this point in time. I mean, it's fairly valued given the competitive environment.
All right. Hi, Prakash. We're in December. The flows are thinning out. People are taking it a little bit easy. There's this big unlock trade, party vibe that's likely to take place. How do you play it? I mean, will you look at the aviation space? Do you look at, yesterday I was speaking to Amisha Vora and she was talking about the bags, Safari as well as VIP. They have already re-rated quite a bit, but she believes there's more in store. Or is it the hotel industry that you look at?
Good morning, Nigel. So I know who better than you to actually tell us about what's going to be the trend in terms of the party.
I can tell you the trend, Prakash, but I can't talk about the stock price, right? I mean, you're the one who can help us out with that, and our viewers want to listen to you.
No, absolutely. So I do agree. The luggage sector, the segment is something which has kind of, not only this particular theme, but from a import substitution perspective, the kind of China effect that it always was kind of under in terms of a cloud. That's gone away, and the growth that you are seeing, the kind of price points that you are seeing, and we spoke about Safari, last time when the results were out, and it continues to outperform VIP from a secular, standpoint. And my sense is from a bottom-up basis, also, if you see some of these companies, while they can, be very richly valued from an anecdotal perspective, probably, the earnings catch-up is going to be much more rapid than what we imagine. So I do agree with the comment that the luggage industry has more for growth. And I think Safari definitely stands out as a very good bet within that. But my bet is on airlines. And I go back to, I remember Rima had asked me once about how, the Tata consolidation is going to impact the existing players, which is only two right now, right, in the real sense. But in that, if you see the kind of market share that Interglobe or Indigo is kind of, still managing to grow, and the tie-ups that it now has, these code share with Turkish Airlines, for example, certainly opens up such a huge vista of repertoire of flights that to be able to go to Europe, you will use an Indigo to go to some base, right? And then that's what works for them. I mean, they could probably latch on to the Turkish routes, Turkish Airlines routes subsequently, but to the hubs, Indigo works well, and it kind of gets seat occupancy. It gets assured of load factors, which are very impressive. So from that perspective, crudes coming down, market share, holiday season, pricing power, people, when they want to go out on holidays in this period, you really don't bother about the price so much, which you would otherwise do, right? Where you could replan things. But here you have a short window of 30 days and you want to utilize it to the best. You will end up giving out that pricing. So I think Indigo is definitely the play. Hotels, I think, are fairly valued at this point. I wouldn't really look at them.
The other thing which is going in favor of airlines, of course, is oil prices, which are sharply down. But it'll be interesting to see. I read an article which said that, all of the Tata Group airline entities combined, if they were to become one, they'd perhaps have about a 35-40% share, which is substantial. But that was an analysis. So we'll have to see if that actually kind of does come through, and if they decide to do it, bring everything under one head. But we've got a new listing today as well. So Dharmaj Crop Guard will be listing on the exchanges today. Sonal is here to tell us what to expect from this one. Sonal, hi, morning.
Good morning, Prashant. Well, it's expected to be a very strong listing because the subscription figures also have been very strong. Just to give you some perspective about this fundraise, 251 crore is the issue size, out of which offer for sale is 35 crores and fresh issue is to the tune of 216 crore rupees. The price band is between 216 to 237 rupees per share. As I said, subscription was really strong. So the total subscription was 35.5 times, out of which QIB saw 48 times demand, non-institutional at 52.29 times, retail at 21.5 times, and employees at 7.5 times. The use of these fresh proceeds will be for funding working capital requirements, general corporate purposes, and also upgrading their current facilities. It is an agrochemical company which is into manufacturing, distribution, and marketing of different types of agrochemicals like herbicides, insecticides, and it exports to more than 25 countries, the likes of Latin America, East African countries, Middle East, and Far East Asia as well. Their performance in terms of revenue and profits has been improving by the year. FY20 they had revenues of 198 crore rupees, and in 3 months of FY23 they already did 220 crore rupees. Margins have expanded from 9% to 12.2%, and even profits have been continuously increasing for the company. In terms of valuations, at the upper price band, it is priced at 27.9 times one-year forward earnings, which is in line with the likes of Rallis, but much higher than the likes of India Pesticides. So it's largely at the sector average valuation, and looks like it could be a strong open today for this particular company.
All right, thanks very much, Sonal, for that. Prakash, I believe you have looked at this, and I mean, what's your view on this one?
So primarily, it was out of the sheer interest that this segment attracts, and we've seen in the past, some of them have done very well post IPO listing as well. So this is a very, very strong franchise. You've got all the boxes checked, tick marked here, whether it's exports, whether it's product salience, whether it's strong relationship. But my concern is with the valuation. Naturally, it's definitely being priced at the top end of what it could fetch. But given the fact that a lot of the employees also, I mean, these days you see a lot of these companies come up with issuance of fresh equity, but it doesn't really see any subscription or contribution or participation from the employees in some of these cases. Whereas here there has been a very distinct call for that, and of course, the overall IPO, attractiveness has brought in numbers. But just wait for 2 quarters whether this consistency, and there was this delay in the IPO itself. They had to do it about a year and a half back, but there were reasons why it was delayed, and that possibly once those 2 quarters ease out all those issues of the past, that's the time to kind of look at, and the market might give you an opportunity to enter at softer valuations, Prashant. That's my gut view, but it will do very well given the kind of strong demand for the product, for the segment and for this company's paper. So today you could make some money if you're lucky to have got allotted, but otherwise you would not. I wouldn't recommend buying into it at this point.
Okay, don't buy into at the opening levels, which is expected to be a very good start, a good debut for Dharmraj Crop Guard. Prakash, do you look at HDFC AMC? Now, yesterday, the stock did well. It was up 3.5%, despite the news that Aberdeen is going to be selling close to about 10% odd in the company. They'll cease to be a partner for HDFC AMC. So one would have thought, right, the expected supply would keep the stock subdued. And separately, despite this exuberance that we've seen in the Indian markets, its outperformance, HDFC AMC should have benefited. But HDFC AMC stock price is actually down 11% in the last 1 year. So this, the optimism in the equity markets has not really translated into the stock price gains for HDFC AMC. So what explains that?
Yeah, absolutely. So, this is very similar to some of the sectors like, let's say, telecom. I mean, I know it's not, exactly like-to-like comparisons, but when telecom was doing well as a sector, as the consumer segment started growing and the features started improving and pricing started stabilizing, the stocks didn't do well. The reason was that they had very little ability to keep on pushing their earning power. And in this case, you also have a regulatory overhang where the pricing or the fee structure is not something which can ever move up. It can only come down. It can only diminish in terms of margin. So you keep on having to grow up scale, and they've probably lost a little bit of the market share in terms of that growth rate that they used to have. Because what's interesting about the AMC segment or market now, Rima, is that even smaller players like Parag Financial Services and all, they have started getting a lot of market share, the quants of the world. So it's a very fragmented market, even at the top and at the bottom. So that's where it's happening. I think the Aberdeen block getting out of the way is something which a lot of people thought, once this is out of the way, at least you don't have a supply overhang, and that's why this is like the bottom of recent weeks, which you could kind of buy into. But the whole point is that AMCs, you have lots of choices now. There's lots of new listings that have come in. You would have to decide whether you want to latch on to any of those or some of those. I keep on saying the best way is to play with CAMS. To play the sector is go to CAMS. CAMS is the key beneficiary in whatever happens to each of the AMCs, largely because of the kind of coverage it has. And if you were to grow that, see that segment grow, I think CAMS will definitely be a direct beneficiary and a more finite beneficiary. So it's available at decent valuations now. No complaints, which you could kind of point fingers at in terms of the rich valuation that it had earlier. So I would go with that. HDFC AMC is good news. That Aberdeen is decided, and of course, a new merger equation will change how the ownership rests with the group as a whole, and that's probably one of the reasons why this got triggered.
Okay, all right, Prakash, stay with us. For the time being, we'll slip into a snappy break. Up next, we'll be joined by our technical experts, Midesh Thakur and Shrikant Shah. They're waiting for us. We'll continue our chat with Prakash as well.
A multi-asset portfolio